If you have $500 sitting in a savings account right now, I want to show you exactly what I would do with it, step by step. No fluff, no complicated strategies. By the end of this video, you will know exactly where to put it and how to make it grow automatically, without touching it again. Let's start with the biggest lie people believe about investing, that you need thousands of dollars before it even makes sense to start. That is completely false, and fractional shares killed that myth for good. With $500 today, you can own a piece of Amazon, Apple, and the entire S&P 500 index, all at the same time. You do not need to buy a full share of anything. You put in your amount, and the platform handles the rest. But here is where it gets genuinely exciting. The real power is not the $500 itself. It is what happens when you leave it alone and keep adding to it. Run the numbers on this. If you invest $500 per month and earn an average annual return of 8%, which is a conservative estimate based on historical stock market performance, after 20 years you are looking at well over $290,000. From $500 a month. That is not a get-rich-quick promise. That is compound interest doing exactly what it has always done for people who started early and stayed consistent. The earlier you start, the more time your money has to multiply. Waiting another year does not just cost you 12 months. It costs you the compounding that would have happened on every dollar during that time. So the question is not whether $500 is enough to start. It absolutely is. The real question is where you actually put it. I am going to show you the platform I personally use. And I mean personally. This is my actual account. What you are looking at right now is my M1 dashboard, and I want to walk you through why this is the platform I landed on after trying a few others. M1 Finance is built around a concept called a pie. Think of your portfolio as a pie chart. Each slice of that pie is a stock or an exchange-traded fund that you choose. You decide what goes in, you decide what percentage each slice gets, and then M1 handles all the math automatically. Every single time you deposit money, M1 looks at your pie, figures out which slices are underweight compared to your targets, and automatically buys into those positions to bring everything back into balance. You never have to manually rebalance. You never have to think about which stock to buy this week. The system does it for you based on the targets you set once. That feature is called Auto Invest, and it is the reason I keep coming back to this platform. Every time money hits my account, whether it is a one-time deposit or a recurring weekly transfer, M1 splits it across my portfolio exactly the way I set it up. I do not have to log in. I do not have to make a decision. It just happens. This is the closest thing to a true set-it-and-forget-it investment account I have found, but I still have complete control over exactly what I am invested in. That combination of automation and control is rare, and it is genuinely what separates M1 from a lot of the alternatives. I will drop my referral link in the description below. Using it helps support this channel at no cost to you, and I only recommend things I actually use myself. Now I want to talk about the fee, because I think being upfront about this is important. M1 Finance charges $3 per month as a platform fee. Yes, there is a $3 monthly fee. I want to be completely real with you about that. I am not going to gloss over it or bury it in fine print. But here is the full picture. Because context matters. That $3 monthly fee is automatically waived once your total M1 assets reach $10,000. You do not have to do anything. You do not have to call anyone. It just disappears once you hit that threshold. It is also waived if you have an active M1 personal loan. So for most people who are growing their account consistently, the fee is a temporary cost of the early stage. Now let's put $3 a month in perspective. That is $36 per year. Compare that to a robo-advisor like Betterment, which charges 0.25% annually. On a $10,000 account, that is $25 per year, so actually slightly less than M1 at that balance. But on a $50,000 account, Betterment's fee becomes $125 per year, while M1 is already zero because you crossed the $10,000 threshold. As your account grows, M1 becomes significantly cheaper. The fee is real, it is worth knowing about, and it is also genuinely competitive when you look at the full trajectory. Here is something that most beginner investors have no idea exists inside M1. And honestly, it is one of the biggest reasons I think this platform is worth talking about. It is called M1 Borrow, and it is a portfolio line of credit. Once you have a taxable brokerage account with a sufficient balance invested, M1 allows you to borrow against your portfolio without selling a single share. Think about what that actually means. If you ever need cash for an emergency, an opportunity, a large purchase, instead of liquidating your investments and triggering a taxable event and losing your position in the market, you can borrow against what you already have. Your investments stay in the market. They keep compounding, and you get access to liquidity at the same time. Wealthy investors have had access to this kind of strategy for decades. It is called a securities-backed line of credit, and it has historically been something only available to people with large brokerage accounts at major financial institutions. M1 makes a version of this available to regular people. Now, I want to be clear. This is a margin loan, which means there is real risk involved. If your portfolio drops significantly in value, you could face a margin call, meaning you would need to repay part of the loan or deposit more funds. This is not something to use carelessly, but as a tool for someone who has built up a meaningful portfolio and needs short-term liquidity without disrupting their long-term investments. It is genuinely powerful. It requires a minimum balance to access, so it is not available on day one. But knowing it exists changes how you think about building your account over time. All right, let's actually do this. I am going to walk you through exactly how to invest $500 on M1, step by step, right here on screen. First, open M1 Finance using the referral link in the description. Once your account is set up and funded, you are going to build your pie. For a beginner who wants a simple, diversified, low-cost starting point, here is a straightforward split worth considering. 60% in VTI. That is the Vanguard Total Stock Market Exchange Traded Fund, which gives you exposure to the entire United States stock market in one ticker. 30% in VXUS. That is the Vanguard Total International Stock Exchange Traded Fund, which adds global diversification outside the United States. And 10% in BND, the Vanguard Total Bond Market Exchange Traded Fund, which adds a small layer of stability to the portfolio. This is a classic three-fund portfolio structure that has been recommended by long-term investors for years. It is simple, it is diversified, and the expense ratios on all three funds are extremely low. You can see my actual pie on screen right now. Feel free to use this as a starting point and adjust it based on your own goals and risk tolerance. Once your pie is built, turn on Auto Invest and set up a recurring deposit, even if it is just $50 or $100 a week. Then watch what happens the next time money hits your account. M1 automatically distributes it across your pie, buying into whichever slices need it most to stay on target. You do not lift a finger. That is it. $500 in, Auto Invest on, and your money is working every single day without you having to think about it. Drop a comment below and tell me, what are you investing in first? And if you want to open an M1 account, the referral link is in the description. It costs you nothing, and it genuinely helps me keep making videos like this.